Hi, welcome to this video day. It's the 2nd of July. It's Tuesday. Just going to give our updated outlook for the Japanese yen. Going to be looking at it against the USD, the euro, and also the commodity currencies. We'll be going to the charts in a moment. Now, in terms of the Japanese yen, done plenty of videos on it over the last few months. It's been our favourite long-term trend following trade. It's had a really great move to the upside. The yen is going far higher longer term in our view. Now, in last week's video, we did say the yen, we felt, had got a little bit extended. It run a little bit too far to the upside, particularly on the USD. We felt the USD could mount a rally. The rally, if it occurred, would be a selling opportunity. USD has mounted a rally, is a selling opportunity in our view. Also, in the other pairs we're going to look at, the yen, the natural retracement we've seen, just an opportunity to get into long yen trades with really good risk to reward. Big trend, it's got far further to run. Let's go and take a look at the charts and do our analysis. Now, please, when I am doing the charts, keep in mind that it is my view as of right now. It can change, of course, in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and get live access to our member center. Right, chart we're going to do first is going to be USD JPY. Right, on the USD JPY daily chart, just in terms of for new viewers, in this video I'm going to give weekly targets. I'm not going to do the weekly chart in this video. You can go and look it up in our previous videos, and it's also in the member center as well. Now, in terms of the yen, as I'm doing this video, it's just below the 108 level. Weekly targets for us are 100, okay, and then a possible run on to 95. So 800 pips down from where we are now, or possibly even 1300. Obviously, that's a little bit longer term. At the moment, this trade is 111.40 in, and roughly 108. So basically, not a huge profit yet, just 340 pips. But we're hoping this one is really gonna become a really great profit. In terms of the other yen trades, same view. Now, in terms of following big trends, for anyone new watching our videos, you're not going to be able to follow them unless you know the big fundamentals and sentiment behind the chart. Okay, once you know the big fundamentals and sentiment, makes the technicals just really easy. I'll draw my technical levels in a moment for anyone wanting to get into this trade. Now, in terms of fundamentals and sentiment, just clearly bullish for the JPY. List them out very quickly here. Big money flows going into Japan, domestic and international money going in, boosting the yen. Japanese investors, they're the biggest overseas investors in the world. They've got 500 trillion overseas. They're bringing that money home with a bit of nervousness in global financial markets, and also businesses are starting to repatriate cash as things improve in Japan. Also, international money going into Japan as well. A lot of financial institutions like the Japanese bond market, for example. So big money flows helping to boost the yen. The big bearish fundamental in the past has been stimulus for the Japanese yen from the central bank, i.e. printing of money. That's at its peak now. It's going to get reduced. It's no longer a bearish fundamental. The yen, most oversold major currency of all in our view. It's had some strength. It's going to get more. It's playing catch up. So it's going to correct its oversold condition on the USD and a number of other currencies. Important, it's not falling despite strong stock markets. Stock market's been pretty strong. Yen is a safe haven. Normally in risk on, the yen doesn't do well, but the yen has been pretty firm over the last few months. If stock markets go south, the yen will get a massive boost. But I think in terms of why the yen is going to stay strong longer term is because the global economic slow up is not going to turn around. We may not have a crash in the global economy, but as long as the global slow up continues, the yen is going to remain firm on safe haven flows. And you can see it in this data here. World manufacturing PMI fell for a 14th straight month to 49.4, okay, which is the longest decline on record at the lowest level since October 2012. You can see it all over the world that economies are contracting. You know, basically global growth is slowing. And a lot of people say, oh, well, if the tariffs are solved between the US and China and they make up and reach an agreement, uh, it'll make a big difference. It won't make hardly any difference at all. Yeah, if they do reach an agreement, an amicable agreement on tariffs, the US and China, it will not stop the global economic slow up. So what you've got is really big fundamentals behind the yen. What you've got now, just a little bit of a bounce. Okay, that bounce, in my view, is a selling opportunity. Just for new viewers again, in terms of how we played the trade up here, 112 level, smart money goes heavily short. When I say smart money, I mean the COT net traders positions, which is our favourite sentiment tool, was telling us that commercial hedgers, the smart money, sold really hard. Sell off the level, come through 111.40, that puts us short. Then we want this green line here, which is the mid-Bollinger Band, a 20-day moving average, to hold rallies. So we're always looking for that in strong trends, and does quite nicely. 3 rejections there, another rejection there, nearly get to the 20 there, and then we come through it this week. And we were saying last week, felt there could be a rally. Yeah, the dollar got a little bit oversold. We know smart money covered out into 107. So a rally above 108 could occur above the 20-day moving average. And we basically felt that was the level that would not be taken out. So I've drawn my line quite where I want it. It's actually 108.80. So I stopped down to 108.80. And we did pop our up through 20-day moving average. We stole, and now we're coming back through it. So where would you sell if you wanted to get short? Got a kind of gap there, you can see it. I've just drawn a trajectory in which really needs to be cleaned out with, in my view, those 3 candle bodies there. So get well clear of the round number. So I'd say 107.65 for fresh positions, and then see if she runs. Okay. Now, in terms of where would you put your stop, obviously we have got a slight cushion of profit. I would actually, for fresh positions, 109, I think 109.30. It's just a little bit back. Okay. Your potential on the downside is very good from here, isn't it? Well, obviously, if our targets are reached, you're not risking, very much. You've got like, kind of 4-to-1 risk to reward. Now, obviously, if the USD does suddenly reverse up and we got taken out on stop, we would actually key off this 109 level, see if we weakened, or if we went through, we'd sell back through it, and probably put our stop behind 110. I can't say exactly what we're going to do if that occurred, okay? But that would be the general idea. You can obviously follow this trade daily in the member centre if you wish to, but I've got a feeling we'll probably break to the downside. The rally just looks like a natural correction of oversold, and lower prices, in my view, should unfold. We shall see. In terms of a pair that we really like, which is probably, in our view, got more downside potential than USD JPY, it's Euro JPY. So let's go and take a look at that trade setup right now. Right, sorry, we're on Euro JPY daily chart, and in terms of this pair, I think it looks even more bearish than USD JPY. A lot further to go on the downside in our view. And in terms of weekly targets, just noted them here, and I put them against a percentage gain, okay, if the target is met with no leverage. Okay, so weekly target 114.50, first target 6.5%, then 118.03%. No leverage at all. And obviously, this last one is pretty ambitious, but I think that's going to get down there this year. That is certainly on the cards. And I think it's just a general point. If you're following big moves, just look at the percentage gain with no leverage. It really helps because a lot of traders focus on pips. They get impatient with big trends because their size is normally too big. This just shows you don't need much size, okay, or leverage. to catch a big trend, and you'll relax and you'll hold it if you're using small leverage. If we go back to USD JPY, if I get to target there, that's over 10%, isn't it? No leverage. Yeah, you got to think in terms of a few big trends. Yeah, if you're following longer term trends, really boost your bottom line profits. How many traders would be happy with 30% per annum? Okay, most, because most can't make above 30%. If you look at this trade here, okay, it's got to reach it, but to target, that is over 30%, isn't it? It's 36% with no leverage. Yeah, it's just an illustration, so to speak, that following big trends, yeah, don't focus on pips, focus on percentage gain, okay, and no leverage or very little leverage. That way you can hold big trends. And this one, I just love the look of. In terms of the euro fundamentals, just so bearish. It's going to go down a lot further than USD JPY in our view. Why? We've seen the yen fundamentals, but in terms of euro fundamentals, stimulus is going to be increased. In Eurozone, they've already talked about it. They've got no choice. They've got an economy that's slowing up quickly. They face potential recession in Eurozone. Nothing in the economic data to us points to anything other than Eurozone going into recession. There is no inflation. You have core inflation in the economy. There's no wage inflation. There's no growth. There's high unemployment. You've got major export markets slowing up, like China, for example. You've got the potential for Trump to hit Eurozone with tariffs on autos, which he's threatening. It's a complete mess, the economy. And then you've got political problems as well. Very fractured the zone is in terms of divisions. The economy is just not going to turn around anytime soon. All the risks are to the downside in our view. The ECB, okay, they're going to do stimulus and all the rest of it, but it's not going to work. Okay, but I just do not see a big rally in the euro. Now, in terms of the way we've been playing it, we took a trade through 126 at 125.80. We then waited, as per usual, if we're looking for a big trend, for the 20-day moving average to give way. It gave way quite nicely. Then we get stopped out at 122.80. So it was a 300 pip profit. Okay, so we got taken out just as we came up to 123. We sold again 122.50 recently in the member centre. Now we've sold and we did come back up to try and get above the 123 level. Okay, we felt this would hold on a close basis, and we've got our stop at 123.80. So basically well clear of those two bodies. Now, come up through 123, come back. Now today we're back through 122. For us, that's it. The rally we think is over. We think the euro is a sell. If I just drew a trajectory there. So do a reverse trajectory. You can see what I'm doing. There goes the red. That red comes back, test that red. Fails through the 20. There's the level to get short. For fresh positions, 121.70, 123.80 in our view should be the stop. That's where our stop is. See if she runs. 114.50 is easy on the cards in our view. And then longer term, the par level. I mean, there are levels in between, actually. I just do not see any big rallies in the euro. Of course, they can come. But this trade for us is such a great risk to reward. I'm not too concerned about breaking to new daily lows. I think the rally has been, that's as good as the euro is going to do. Should get new daily lows and then follow through towards the weekly support level. So I'm really bearish of this one. I think it's a great opportunity. Anyone wants to get into this trade as a fresh position. I think the levels look really good. Right, what we're going to do now is finish up and just look at the commodity currencies. I'm going to do them all kind of as a one, so to speak. They've all got the same fundamentals and the same outlook for us. They all look good long-term downtrends. Just going to use the charts from our member centres. So let's just go and take a quick look at them. Right, just going to do the commodity currencies from our member centre just very quickly. They're all fairly similar. This is AUD JPY. I'm just trying to line up my chart. There we go. Now, in terms of, we've said it in the intro, obviously global growth is slowing up. It's going to slow up for a good while. It's not turning around anytime soon. Every commodity currency is obviously going to suffer longer term. They rely on global growth, obviously. They're all going to be impacted to various degrees. I'm on the Aussie first of all. Now, in terms of the Aussie, we're short. Sorry, misspelling there. We were short. We've cleared this one now, but 79.80, put out 75.80. So it was a decent profit, 400 pips, and came in through this level here, back through the 80 level, followed it down, and we eventually get stopped out on this poke above the 20-day moving average. Now, in terms of moving our stop close, we wanted to protect the profit, but we've sold almost instantly again at 75.50, and we were out at 75.80. So just seen our poke above, taken her back through. This candle here today is now red. Okay, so just basically wanted to see if we could hold above 76. We couldn't, came back through. A lot of resistance here, okay, in our view. Look at our stop, 77.30, so back, giving it plenty of room behind the next round number. Now we can see if she runs. Now, in terms of the way we read the fundamentals and sentiment, it's going to be very hard for the Aussie to get above 77. We're looking for a move down to 60, obviously looking for a break of chart lows at 74 first of all. It'd be a big percentage in terms of profit if we get near our target or to our target. So, it's not a big risk again, is it? Not risking too much. 180 pips to make way more. Okay. Now, the pair that hasn't given us much joy in the commodity currencies is this one, actually. It's CAD JPY. We had one decent profit there, then we got a decent loss. Basically got nowhere with this one, really. We're now back short at 82.50, okay? And I've given this hardly any confirmation at all. Coming up to the round number 83, she's poked, she's tried to get there, she can't. Just coming at 82.50 and stop 83.80. So I'm not risking much. I'm risking 130 pips. Even if we break down from here just to here, I'm going to make decent return against my risk. But I've got 70 down as the longer term target. I think this is a great risk to reward trade, just simply because the CAD, I've mentioned it in other videos, it's just overbought against just about every major currency I see. And if I look at what it's doing tonight, she's a little bit red. Just feel she's going lower. And if you wanted a bit more extra confirmation, you go through 82 or whatever. I've just gone early on this one. I think it looks a great risk to reward trade. But this is the commodity currency we've got nothing out of so far. AUD JPY has done well for us, but so is NZD JPY, which I'm just going to take a quick look at. Yeah, you can pick whichever one you wanted or do a combination of these commodity currencies. I just think they all look good longer term. Just find NZD JPY, NZD CAD. It should be the one before with a bit of luck. Yeah, there it is. So if I just do that. If I got the right one, where are we? No, it's USDs are. Sorry, thought it did look right. NZD JPY. Really good profit on that. We were short at 75.30, stopped down at 71.80. So that was probably the best profit out of the commodity currencies that we had. Well, it is the best profit. We've now sold at 72.20. Okay. Let's rally up here. You've got a gap here, and then you've got a round number behind. It's just I won't go through the fundamentals here, but the Kiwi is just too extended on the upside. It's just going down. We've sold 74.20. I'm giving it a 200 pip stop, but we're looking for chart lows, then 68, then 60. This one's got a long way to go on the downside. I'm going to do a full video on the Kiwi. For me, the Kiwi is just a sell everywhere. But yeah, a long way to go downside, as all the commodity currencies have, against the JPY, in my view. Someone did say to me recently on sort of trading at the yen, it does rely a lot in terms of us looking at the sentiment and big fundamentals, and not so much on the technicals. I would say that is fair comment, actually. I always think if you look at the sentiment and the fundamentals, and it's not difficult to see why the yen is so bullish on the currencies that we've just looked at. Technicals become easy. And yeah, I'm hoping that our judgment is right. Some decent profits so far from the pairs that we've looked at, and hopefully more to come. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.